Hey, what's up guys? Today we're going to talk about how to use the seconds time frame, or how to utilize the seconds time frame for your strategy. So right now we're on EU. So first we have to look at the structure. What do I see structure doing? See structure start from here, lower low, lower high, lower low, possibly lower high, but still didn't break this lower low. We're still consolidating or ranging. Then we create this, technically not a higher high since our previous higher high was here. Then broke lower, which is a lower low. Then failed to go higher, so technically we're still in a bearish or a downtrend. So we're expecting price to go lower below to create new lower lows. Then we look at the inner structure. We look for correlation. What do we see structure doing? Breaking these lows, creating lower highs, breaking these previous lower lows. So technically we have our lower low. Now we wait for a pullback to create a lower high, then to continue to create a lower low. So what we have to do is we look for zones within below, not above this lower high, since we're expecting price to create a lower high. So we look for zones below the previous lower high or the current lower high that we can trade from. So what we do, we look for order blocks. We see order blocks. Let's just erase that. So I see an order block here. We're on the 15-minute order block here. What do we see? Price went below it, ready for mitigation, then immediately got mitigated. So technically this order block already got filled or mitigated. Then we have this another order block which got mitigated by this order block. So basically then you don't see any last down move before the up moves. You just see wicks because price is just going down, mitigating, doing that. So technically right now we call this a mitigated zone or a fair value zone, since price just keeps mitigating those OBs. OB here, OB here, OB here, OB here. As you can see, price keeps going up to those OBs to mitigate them. So we see at this OB, and we look at this OB right here. Why would we choose this OB? If you can see, there's no previous price, or price did not tap it yet, so technically it's still a valid one. Then also this OB created this huge imbalance here, which is a good thing, meaning the institutions were selling heavily, and buying quickly up heavily to liquidate those on the lower time frames and faking out people. Igniting candle something bar, I don't know. Then continue to push lower aggressively. Hence we have a imbalance here, meaning we don't have a fair value. So we're expecting price also to fill this, which already got filled. And we also see that this order block 2 also broke this previous lower low. So this order block did a lot of things, from liquidation from these lows, also these lows, and creating this imbalances. So we choose that order block. So basically what we did, we look for structure, we look for a POI or an order block, and also we have some few imbalances there. Then we wait for confirmation. What do we use for confirmation? We use Wyckoff. So we're waiting for Wyckoff to happen. Now if we just stick on the 15-minute time frame, we can't really see Wyckoff, because if we stick on the 15-minute, probably price is gonna do this. Let me just erase that. Price is probably just gonna do this. If we're expecting Wyckoff from this current time frame, expecting it to look like this: the buying climax, ST, sign of weakness, a UT, then a UTAD going above the UT, then breaks of structure, then we enter on the retest on this certain OB here. There should be an OB here. But if you look at that, if you look at the size, it looks like a size that doesn't really fit by the OB. If you don't know what I mean, we already made a video on how to use Wyckoff properly. It's titled like that. But basically for me, this distribution or Wyckoff schematic is too huge for my liking, since it's bigger, the schematic is bigger from the POI. So what I mean is, I want the schematic. Let's just go to the 1 minute real quick. So if we have this certain zone, this certain OB here, I want the schematic to have a size not like this. Since if we look for a bigger size, wait, let's just make it lower. If we look for bigger size, basically we're ruining the RR. So if we look for bigger size like this, we enter, let's say there's an OB here, we marked it like that. If we enter on that, let's just say that's 7.3, then we're better off just using this OB without confirmation, since it's lower pips, meaning we can have a better RR going lower. So the reason why we go on low time frames to see a schematic, tinier schematic on the lower time frames, to first get better RR, and second, also fits my rules. I want the schematic to look as tiny as like this, then continue to push lower. Either like this is a valid one, since the schematic is the same size of the OB or the POI, or we can have a way more tinier one. I still accept it. That's why you should backtest, because I can't tell you my experiences or schematics that I see previously based on my experience. So always backtest, forward test. Also, we can see price could either form up this schematic here, a large one, or price could make a tinier one, which is also good since we can use this for confirmation. Also, it's better RR. Let's say the schematic has an OB here. Let's mark it red. So we have a schematic here, let's say with an OB. So if we measure this is a 2.8 pip. This is a 1.2 pip. So if you just target this lows, these certain lows, obviously the smaller schematic is better since it's a smaller stop loss, meaning we can have better R, 21 RR. We have a 9 compared to 9 RR. But not all the time we keep looking for very tiny schematics. Sometimes price could just, let's just erase this. I've said this in a previous video, but I'll say it again, because price could technically either way, price can do this, UTAD, continue push lower like that, or price can do this. Oops, my bad. Price could stop you out because it wants to form. So we have this UTAD, this one, then breaks of structure. Oops. UTAD, breaks of structure, then we get stopped. Let's say we see an OB here on this tiny schematic. We set a position there, stop loss above the OB, but suddenly price just blew above it. And the reason why stopped you out doesn't mean you were wrong, but basically if you just zoom out, what do you see? Price could continue create another schematic. This could be the UT, then we're expecting another low, then a UTAD, and breaks of structure. Then we can have another look for an OB here, and we set a sell limit here, or you just watch it for a market order. Then we continue to the downside. So that's one of the reasons why you might get stopped out on very low time frames. Because if you just zoom out, let's say you keep looking on the 5-second time frame, let's say this is the 5-second time frame, then if you get stopped out, then you just try to zoom out, recalibrate your analysis, and keep looking on, or find a story or the reason why price stopped you out. As you can see on this illustration, we see that price kept creating a larger schematic, which is still within this surface area of this OB right here. So let's get back to the topic. Now How do we use the seconds time frame? Since this is a 15-minute, we can look for schematics on the lower time frame. That's why we use the seconds time frame. Unless, let's just say this OB is a 1-day OB, then obviously you shouldn't go to the seconds time frame, since the seconds time frame could literally just keep stopping you out. Let's say this is your POI or your order block marked out. Why is it large? Because we're illustrating that it's in a daily time frame. Then if you look on the seconds time frame, it could just basically look like this. And this is so hard. So price went up, went up, went up, went up. Oh, a UTAD. Then you try to short it. But if you get, sometimes it works, sometimes it doesn't. The reason why it doesn't work, as I explained earlier, the reason why it's got stopped you out, because price could create a larger schematic. And we have a break substructure of these lows by this thing. Then we can look for an OB here to enter from. So either way, this could work. That's why you do backtesting, because usually it doesn't work since this is a large zone. Since price could go deeper to other refined OBs here, imbalances here on the previous price over there, for example. So you have to balance. You just have to use your brain on when to use the seconds time frame. But for now, since we're on the 15-minute, unlike on the illustration that we were on the daily, we can go look on the seconds time frame since we're already in a low time frame, like the 15-minute. So we go for the 15-second or the 5-second. So we wait for price to touch these zones, or we wait for price to react from these zones. So we play it out. It's touching. I still see no schematic. Oh, it dropped. Possibly this could be a UTAD. This could be the UT. This could be the buying climax. So this one here, this wick swing. So we want price to go below on the certain point so we can have a valid Wyckoff. So if you don't know what I'm speaking about, you can watch my other video about Wyckoff. But basically, a Wyckoff is valid when it breaks the structure point from the buying climax. Buying climax here. This is the automatic rally. So technically, we still are not able to trade this since price did not break slow like this. If it breaks low, then we can look for OBs here, then to push lower. Then we play price. What does price do? Does it break? It doesn't. Oh, it does. So it breaks. So we can see that this is the thing about Wyckoff. It can do the test before it breaks. So it tested this technically. That is a test. And as soon as it breaks this AR here, then we can look for entries. So how do we look for entries? You can use this 15-minute OB, but also remember that too much refining is good for your RR, but it's less probable for price to hit it. Since it's a very tiny zone, price could just touch this larger OB here. I'll show you in a few seconds. There's a larger OB here on another time frame. Price could just technically touch that larger OB and push lower. Since this is a more smaller zone, it's more less likely for price to touch it than go lower. But it can still happen sometimes, and if you took that, that's a 0.6 pip stop, which is pretty cool. So let's say what I mean by we have another OB here, a larger OB on another time frame. If you just look on the 30-second, so we can have this large OB here. It's two mixed OBs. We also have some imbalance, which is good. So we're expecting price to push up and feel this imbalance and also touch this OB and continue lower. At the same time, look at that. We have another schematic. I'll show you in a few seconds. I think there's a schematic here. And we can also look for the 1 minute. And the 1 minute also has this OB. So let's just mark that up. I'm not sure if this hits. Don't remember if this hits. Let's go back to the 30-second. Display price. Does it hit? Oh, it does. Stops you out. Now this is the part what I mean, that if you get stopped out, then reanalyze, then think that why did you get stopped out. The probable reason is probably it's creating another schematic. So this could be the buying climax. An ST, did it go above? No, it didn't. So an ST, a sign of weakness. So you're expecting a UTAD, then a UT, then push lower. Then we enter in this retest on this OP. So this is what I mean. This is a perfect example that you get stopped out. That's why you always risk manage, because no strategy, no EAs, no strategies has a 100% win rate. We can never predict the market. That's why you always risk manage, risk small. This is a long game. This is for a long period of time. This is not a get rich quick scheme. This is, think of it as a actual career for your future. So we see this. Do we see price doing? Breaks it. Then, if you remember earlier that the low of the schematic is where our validation point is. So we see price break this low. So technically this is a valid schematic again. So Wyckoff can happen here. Basically, Wyckoff can happen inside Wyckoff. So we see Wyckoff, a distribution here, another distribution here. So then we can mark up a OB. We can mark up this OB, but I don't think this is gonna get tapped since it's a small zone. Well, tune in next time. We're gonna talk about how to refine your OBs and where is the best areas for you to place that OB. So we see price. Also, we have a huge imbalance here, which is a good thing. Another imbalance here. Probably also this OB liquidated these equal highs right here, then created a unfair value here, which is imbalances, or I don't know what you call that, but basically imbalances. Then we see price. We set a stop limit here. I mean a sell limit here. I don't think it's gonna get hit. And price just drops. So sometimes this happens, so technically it already dropped, but basically this is the an example of how to use the seconds time frame. Sometimes price just drops immediately. Sometimes, let's just reverse it, sometimes price goes up, taps your POI, also taps your entry, then pushes lower. This is also what I mean, that since it's a smaller OB, it's less likely to get hit, but it's very good RR. But if you can see, price went below the certain low here. Just delete that. Certain low here. Slow. Went away from it. Tapped it. Tapped this larger OB. I'll show you in a second. This is a large OB. Then went lower since it's a larger zone. But if you could have, technically you could have taken this, but it's still a tight, it's still 5.2 pip stop on EU, but it's horrible RR. So that's a 3 RR trade compared to this one, the smaller zone, which is a 12-to-1 RR. So this is what I mean, that price could not tap it. Then I'm gonna show you, I think on the 5 minute, it's a 1 candle. 3 minutes. Yep, as you can see, we have a, let's just delete this box. You can see, let's mark it up. We have a OB here. Price went below it. Price went below it. This candle here went below that candle. Then tapped it. Then went lower. And I think it just keeps going lower. Yep, it just drops. But basically, that's how you use the seconds time frame. Then soon I'll talk about how to not get missed out on how to not miss the opportunity, this huge move down, because this happens a lot. If you keep going on lower time frames, this happens a lot, that price just goes down without you. So soon I'm gonna do that on how not to miss a entry point and what is the most optimal zones. But basically, that's how I use Wyckoff. Again, not Wyckoff, but this is how I use the lower time frames for confirmation. So again, we had a 15-minute, we looked at structure, three simple rules. This is what my mentor taught me. Check him out in the description below. MentFX. Look at structure. Bearish, created a new lower low, broke this previous low. We're expecting a pullback, then push lower. Then we chose this zone since we don't really have a valid OB here, since this OB's already got mitigated. We have this OB here in the 15-minute. Then we went on lower. Then we selected this OP. Then we waited for confirmation in the lower time frames. Technically, you can get away with it on the 1 minute. See, since 1 minute, buying climax, an ST, then the UT, schematic 2, like a schematic 2 distribution. There's no UTAD, breaks of structure, then went lower. You can get away with a 1 minute, but sometimes price does this. Let's say let's reverse here. Let's go back to the 15-second. I've seen many times that price did this. So wait, was it this one? Okay, yeah, it was this one. We mark this up as the UT, then buying climax, and an ST, UTAD. Oh no, my bad, UT. Then this could be the UTAD since it went higher above from the UT. And again, I'm not a full Wyckoffian, so I'm just simplifying Wyckoff a lot here. AR, or the sign of weakness. Don't know how to use it, or I don't know. It's up to you, honestly. So we have this Wyckoff schematic here. And sometimes, what I mean that sometimes, let's say price went below it, and below this AR here, breaks of structure. Sometimes, that's why sometimes we go on the seconds time frame. This price sometimes taps it here, then goes lower. Then why do we use the seconds time frame again? Is to look for tiny schematics or confirmations to have the best RR possible. So let's have our entry here. Let's say price tapped it. I've caught a lot. You can join my Discord server. So many people have witnessed it, that I've captured a 1 to 20, 1 to 30, 1 to 40, but it's not all the time. Then also you have to take partials, so it's not a full fat, let's say 1 to 25. Let's say if you risk 1%, it's not a full 25% gain, since we partial on liquidity zones like these lows are OBs. So again, that's why we go on the lower time frame, to have better RR. If you can see, this is a 1 to 25 RR, unlike this one. Let's just, for example sake, let's just use this larger OP. What do we see? 3 to 1 or 1 to 25. This is the main advantages of a seconds time frame. So that is how I use the seconds time frame. Hope you learned something. See you soon.